Well, I'm fortunate enough to be joined by four panellists who bring a wealth of experience to this topic, and I'm sure are familiar faces to many of you. We're going to try and make sure I get everybody in the right order. Okay, from my right, Steve Palmer is Director and Head of ETF Sales and Trading at HSBC. Before joining the bank in 2016, Steve set up and ran an ETF market-making firm and was also previously Head of ETF Trading at RBS. To his right, Ivan Gilmore is Head of Exchange-Traded Products and Global Product Development at the London Stock Exchange. Before joining the exchange in 2017, he headed ETF Client Strategy and Distribution at KCG and has also spent time trading at Goldman Sachs and D.E. Shaw. To his right, we have Thomas Merz. Thomas is Vanguard's Head of Distribution ex-UK. Thomas is responsible for expanding Vanguard's presence in both new and established markets in Europe. And before joining the firm in 2017, he was responsible for UBS's European ETF business. And to his right, we have Antonette Kleiser. Antonette is a Senior Vice President and the ETF Product Manager responsible for both Europe and Asia at Brown Brothers Harriman. In this role, Antonette works with new and existing clients as they build out their ETF offerings, as well as BBH's business development and relationship management teams. Thank you all very much for joining. Now, as I promised, or perhaps threatened earlier, this is going to be an interactive session, so I wanted to kick off the conversation with another poll. The question we're looking for help answering is, what will drive the most asset growth in ETF assets over the next 5 years? So that's what will drive the most asset growth in ETFs over the next 5 years. We have three answers for you. Basically, innovation, innovative strategies, focus more on cost and specifically low cost being king, and also a focus on regulation, whether the regulatory landscape is going to really drive asset growth. So we'll give that a couple of minutes or a couple of seconds anyway, to see where it sits. Oh, interesting. Okay. All right, we'll call it there. Oh, maybe no. Bit of a late burst from innovation there. All the product managers are out there going, innovation. Okay, that's very interesting. I think when we look at cost, other cities, Paris and London, have actually agreed with you there. I think Paris was 51% saw a focus on cost driving products. London, it was 61%. I find that pretty interesting because when you look at the US and Europe, European cost is not that low in many different areas. However, we have seen more and more firms launching low-cost products, so clearly a sign of things to come. But I think that provides a great segue into the first panel on the shape of the ETF industry. Europe now has more than 2,800 products, significantly more than the US. So, Antonette, I wanted to come to you for the first question. Obviously, BBH acts as an administrator, a transfer agent, custodian. Talk to us a little bit about the types of asset managers that are now coming into the ETF industry.
Thank you. So I suppose, I've been involved in probably this industry for the last 10 years. And since 2012, when Vanguard launched their ETFs, we're still seeing a lot of US managers with a huge interest in Europe. So that continues, even though that's 7 years ago. Most recently, we've had JP Morgan launching their products. We're also continue to see interest from UK managers, even a lot of active managers who are looking to come into this space. Sometimes it takes them a long time to make a decision. So sometimes we can be working with a company for an issuer for perhaps 5 years as they take this leap. But we're certainly seeing a huge amount of interest there, and certainly some more asset managers, contemplating coming into the space. Obviously, we're also seeing European asset managers with interest. And I think, the reasons being is, and we'll probably talk about them as we go through the panel, but there's certainly things happening in the ETF space that are of interest, whether it's the commingling of the ETF and the unlisted share classes. I think the transparency debate globally is one that a lot of asset managers are looking at. So particularly active, they obviously don't want to be able or to have to disclose their holdings on a daily basis. This is not just a European issue. We're seeing it in Hong Kong. We're seeing Canada, Australia coming up with solutions to it. We're seeing recently the Presidian model in the US. In Hong Kong, we see that the SFC earlier this year allowed active portfolios and also allowed the commingling of listed and unlisted share classes. So, I think it's a very exciting place for issuers. I think the innovations that are happening in the market are attractive. I think, what we saw there at the very start in terms of the growth potential of the European market is obviously something they feel they can't miss out on and that they need to be part of.
I think the point is that historically we've always considered ETFs as this passive product, and that's actually not true. And an ETF is just a piece of technology. It's a cool piece of technology that works, and it allows you to express an investment decision. And so that's why I think we're seeing more active players coming into the market, because actually it's an access point to their investment product. And really, active managers are starting to work out that the ETF is a very good wrapper, if you like, to allow clients to access their investment products.
That's a great point, because I think, we are seeing an awful lot of new entrants coming in. And the big question for me is obviously they see that pie, that potential 25 trillion out there, and they want a piece of that. But the question to me is like how they actually then get that. Obviously, Vanguard came into this market, relatively recently in the bigger picture of things. Scale seems to be something that is very important. Like Thomas, how do you guys think about that? Think about getting scale, think about kind of trying to, I guess, replicate some of the success you've had in the US as a result of your size?
Yeah. I think you're right. Scale, in particular, when we keep it as a passive instrument for the moment, right? Scale is very, very important to be a successful issuer of ETFs. And I think, Sean mentioned that in his introduction speech that, you need a certain adaptation rate, usage rate of this instrument to get the scale. I think that's what you were referring to, which probably is very interesting. We see Europe coming to that kind of tipping point where the adaptation, the use of ETFs is now becoming much broader. And I think that's, to your point, that's why a lot of active houses, for example, also kind of see that as a delivery mechanism for their strategy, right? Because now it begins to evolve a process where a broader base of clients are actually interested in ETFs or use them for portfolio construction processes in a much wider and broader sense. And I think that will bring scale. And I think, you referred to costs vis-a-vis the US. I would argue in some of the core exposures we're at the same level, right? And that has come down significantly over the last 10 years. I remember, right, having a simple core exposure, SMI, DAX, Eurostoxx 50, being 35, 40 even, right? SMI was 40 10 years ago, right? They came down massively into single digits. I think that's what will drive the adaptation much further and which gives scale, because you can only manage these portfolios very cost efficiently if you have scale, and you need huge scale, right? And just my last point, how do you overcome that scale point? Because a lot of investors still think and go along with selection of ETFs, taking size into consideration, right? A big ETF is a good ETF, and do not really understand fully that smaller ETFs, maybe younger ETFs, which just have to build up that scale first, are as accurate and as appropriate for the portfolio. So to overcome that level of a certain size is still kind of inhibited the success of some of the ETFs in Europe.
Steve, you wanted to jump in? Whilst I cough away.
Whilst you get yourself. No, I think I was very interested in that. I think when we talk about cost, we tend to focus on TERs and costs. But actually for me, and I think Ivan, you'll probably agree with me, actually when we look at, for me it's total cost of ownership now. So when obviously as a trader on the execution side, I get increasingly frustrated when I see poor executions of ETFs, and actually the execution can, dwarf the cost of the TERs in many cases in terms of the, you can spend, many months working out which product is the best, which one's the most cost effective. Obviously there's been huge fee compressions in the industry which has brought down TERs. That's all very visible. But actually when it comes to execution, that's where a lot of costs are being wasted, in my opinion. And which is why I think, when we talk about where it was very interesting to me, that poll, because actually I think total cost of ownership, not just cost of the product itself, is where the focus is going to come from. And that's really where, we're spending a lot of our time in making sure that the user experience, and that includes obviously the cost effectiveness of their execution, is where it will play its part. And I think that's where the growth is going to come from, because there's a lot of good people working on some very good bits of technology to allow clients to access these products in a far, far better and more transparent way, which is ultimately what we're working towards.
So I want to get into the user experience and kind of the trading situation in more depth in a second. But before we go into that, Ivan, I just wanted to come to you on product innovation, because obviously you have this great position sort of at the London Stock Exchange. You're seeing all of these issuers coming to you with their products. Where do you see the innovation? Is it on the active side, given that there are more active managers coming in, or are you seeing kind of more innovation in other areas?
Yeah, I think we're some years away yet in Europe from what you would consider a very active, non-daily, transparent mutual fund world coming to ETFs. I think there's, a good couple of reasons for that. One is, the US debate really is just unfolding. There's very different structures of funds over there than we have in Europe, but also with the Central Bank of Ireland and IOSCO, not to mention other regulators, but they're really going to take time to understand how this evolves, and they won't make a misstep in this, given the size of the industry. Let's bear in mind, UCITS is about 10 trillion euros of assets, and ETFs are probably 7 or 8% of that. So they don't want to just, run foolhardy into something that might turn out not to be as well regulated as they might have liked. So that's going to take a little bit of time. I think just in terms of coming back to passive for a second and the other types of exposures, yes, we're seeing lots of innovation, many new issuers coming to market, some of them using white labeling firms to get quick access to the European landscape rather than setting up themselves. And I think Sean mentioned a good point earlier. It really is important to kind of really do the due diligence, understand, what you're getting, understand the, what you're paying, not just in the TER, but what the cost of trading might be. And just to really round off Steve's point a bit, I think the role of the exchange, if you think exchange traded fund, we have some issuers who say, well, it's not an OTC fund, is it? And they make that joke. So the exchanges really have been working very closely with the issuers to, get listings, and we charge for that. The issuers often then have to pay a market maker to, be there 95, 100, as close to 100% of the time as they can. And they pay for that. It's the exchange hasn't had as much to do with trading, given that they've gone to, the various RFQ services. I think what we're trying to do at the LSE, and we see some of our competitors in Europe do this as well, we're trying to bring new tools and new ways of matching buyers and sellers so that actually it's a much more open ecosystem of agency orders, meeting RFQs, people having different options of going on exchange to trade, rather than just simply saying, I need a price now, and what is that price, and trading on that. So I think the development over the next 2 or 3 years we'll see across Europe, not just in London or Milan, but I'm sure other exchanges will adopt this too, is helping the sell side, helping the buy side have more avenues of trading. And what we'll really see then is studies from firms like Steve's, where they show that the actual execution cost has come down dramatically as well. Yeah. And they understand the impact of, from trade inception to trade completion, that actually the cost was very, very low. And I think that will be the next step in giving people confidence that this product is a really low-cost product, not just in TERS, but also in that cost of trading.
Well, I want to come to that trading point, because when we think about ETFs, we do tend to think about them as institutional trading tools. And Steve, I wonder if you could kind of speak a little bit to how people are actually using ETFs tactically, whether that has changed at all in terms of kind of what they're using them as alternatives to.
So we've seen this. So one of the things, obviously, we work in a Delta One business, so we trade a lot of futures, we trade ETFs, we trade swaps. I think the big change that we've seen, obviously, since the financial crisis and more recently with all the capital requirements placed on firms, is that actually the cost of trading those products, the derivatives, the traditional products, the go-to products that people would use for their FTSE 100, their S&P exposures, they're starting to consider the ETF, because at the same time all this has been happening, the cost of the ETF in terms of execution, importantly, and of course the ownership, the TERs that we've been speaking about, are coming down. So we are through these inflection points where actually the actual cost of owning an ETF can be cheaper than what would be considered a traditional go-to product such as a future. We built some tools to help clients to analyse this a little bit further. The other thing you get with an ETF, I think, which is important, is that you get precise exposures. So whilst you can use futures to try and approximate an MSCI World, for example, you can go and buy that precise exposure through an ETF, through low cost, with guess what? Predictable costs of trading. We're going through a roll at the minute this week, and it's been a bit hairy this week for us on the desk because the costs are changing constantly. You don't get that with an ETF, so you get that dependable cost base, and you don't have the bother of rolling these products. So it's really interesting. We're seeing a huge take-up in interest from clients who would otherwise traditionally just use derivatives, and that's been a big change for us on the derivatives trading desk.
Thomas,
Yeah, I just wanted to add something. You were referring to, the more institutionalized and institutional clients who trade usually in big blocks and use futures for just getting exposure in and out. I think what we have seen across Europe over the last couple of years is that the ETF's been used much more broadly, wider, and more clients, and also more wealth-oriented clients, in the sense that they're started to build ETFs for their core portfolio, right? Which never was the case, let's say 10 years ago. They would just, having them a trading instrument, where actually, using firms who can help them to trade is a good avenue to go to. But what we're seeing is that in wealth portfolios, be it in private banks and universal banks throughout Europe, or then more into the IFA space, where they sometimes struggle with execution because their platforms are not allowing them to easily access that liquidity. Liquidity is not so obvious, right? Mm-hmm. But yes, they need them for their portfolio construction process. So I think there is a lot to do still in Europe with regards to the exchanges and the connectivity to the exchanges, and also on the education side, how can you best execute not only big block trades like 50 million, but really like your portfolio construction process, which uses a variety of ETFs, which then also need very low cost execution.
Yeah. I'd just like to come in on that, because I think we here in Europe get told so often that why is the European market not look a bit more like the US? There's so much liquidity in the US. People say 30% of equities plus ETFs is actually in the ETF space. In Europe, it's below 10%. I think the big change that we at the LSE see as the future of trading, I think it applies to all those discretionary managers, all those wealth managers who use execution brokers to trade equities, or to trade options, or to trade the different structures or certificates. They all have those relationships. And actually, by getting the exchange into a better place around the different types of trading you can do, I think trading will happen much more little and often to that point. The implementation will be much more equity-like. And actually, that's a world that, they're very comfortable with, And I think getting that world of, okay, you have an execution broker, they have access to an exchange, we can trade little and often, have very little or no impact, and, get the desired outcome. And I think that's the big shift that will happen in the next few years. I think
MiFID II has been, a great piece of regulation for the ETF industry, because the post-trade transparency that ushered in has kind of shone the light on actually the trading that we all knew was happening in the OTC market. But it hasn't been the full solution, because, of course, it still highlights the fact that the majority of the trading in Europe happens away from the exchanges on MTFs, on venue, through RFQs. But I think that, to the point about the adaptation of and the universal use of ETFs, I think is a little bit inhibited by that fact. So actually, to my mind, this is this can be helped by regulation, but this is actually something that we need to be doing. As on the sell side, we need to be providing clients with better tools to trade ETFs, so they can trade an ETF in the same way that they trade derivatives, futures, equity. If we consider MiFID I came about, at the same time we created these algorithms and these processes that we could allow clients to access the trading of equity. We need to do the same. We are doing the same. We're trying to anyway. There's lots of innovation. I think the RFQ has been part of that innovation, but the RFQ is one piece of kit, and it's not the full solution. It's a great risk trading product. It allows you to trade intraday, but really we need to develop algorithms and things that give clients that ability to maybe work an order, but with the transparency. So, one of the tools that we've been working on at HSBC, so we actually, one of the problems that we hear from clients is they don't have that confidence about what is the fair value of this ETF, right? What is the intraday NAV? So we are now publishing our INAVs, which is our own internal calculated INAV fair value, which is real time, as if everything was open now. So the S&P before the S&P opens. We're producing a live price. The emerging market ETF, where the great majority of the constituents are closed, we are publishing those live, reliable prices through Bloomberg so that clients can access that. And therefore, they can start to make some better decisions about what the trading strategy might be. And then we are completing and delivering in the next few weeks, actually, an algorithm that uses that information. So it kind of reverses that information and says, right, I know what the fair value of this ETF is. I can therefore make a good decision. So the algorithm will go and make a decision based on what it knows the fair value is and whether the bid or offer on exchange is good or bad. And I think that's the point we need to get to the point where we start to bring a lot of the execution on exchange, because only in doing so, to my mind, when we promote the ADVs and we actually show the transparency on exchange, or on lit rather, then I think that's when we start to move to a better place and we start to introduce confidence and transparency to the trading.
I want to bring in Antonette on that, just because I think it's interesting, kind of the MiFID II story. You know, we thought a lot about this kind of like in the run up to the implementation of that regulation, and a lot of the press, I have to say, myself included, was talking about how this is going to be a game changer for ETFs. You know, we're going to see so much more in the way of trading. We're going to see costs becoming much more apparent to investors. Antonette, like in terms of kind of like your clients and what you hear kind of in the ETF industry, has MiFID II sort of lived up to its potential yet? And do you expect it to do so?
No, I from what I hear, no, it hasn't really done what people thought it would do and bring a lot of visibility, if you like, or transparency into the trading. Like the rise of the request for proposal or quote platforms. But I suppose consolidated tape is really sort of where people want to go. You know, I mean, you know, distribution is what we're more talking to our clients about, in the sense, you know, particularly if there are US managers coming to Europe. You know, the European landscape is a very different place. You know, you've got the multiple of exchanges that you need to list on, you know, the whole settlement system in Europe. I think, you know, we're sort of moving in the right direction with the centralizing of settlement through various means. And I mean, that's been pushed in some ways by, for instance, Brexit, where you can no longer will be able to settle Irish securities, not just ETFs through Crest, but you'll have to look to perhaps Euroclear or ICSD to do that. So, you know, I think MiFID hasn't probably done that, but I think that whole fragmentation of the European market, we're making steps, but we're certainly not there yet.
I wanted to give also a little bit of a different spin on that question, because that's very technical, and the trading aspect, yes, but I think MiFID was also about transparency and, you know, giving true information, or at least, you know, some kind of a point of reference for what end investors actually start paying for their services, right, for the product, for what they're actually getting into portfolio. I think there it would be not fair to expect that after more or less 1 year in implementation, you already see some kind of, you know, change happening. But I'm absolutely certain, and that's where I slightly disagree with the polls, or I would have a different spin on it. Regulation, like MiFID, but also others, about cost and charges, what's actually, you know, what's the value of that product through regulation will change the landscape and will drive the adoption of ETFs. But that takes several years, right? Just think of it. The European market of wealth money is very much intermediated, and that this intermediation of getting more transparent information, more choice, more clarity, what you get for what kind of service and what kind of a cost will drive more demand for ETFs. That's where I'm really, really convinced, because I think we all agree on the panel, right? They're very transparent, very easy to understand instruments, and I think they bring very much certainty what you get for what you pay for to the portfolio. I think that will be very important also for future regulation, but also for MiFID. That will percolate through the system.
I somewhat agree, but I think, you know, there's trade transparency, but what we're missing today is price transparency, and I think that's the bit that we need to provide to clients, because whilst, you know, if you trade it on an RFQ, you have no price transparency, right? You don't know what you've paid versus what is the true benchmark to that ETF, which is the fair value. So, you know, you can compare prices against a handful of other market makers, but is that a good price in the first place? I don't know, you know, unless, you know, this is why we've taken the step to provide that price transparency. So I think that that's the last step that we need to do. And as I say, this is not necessarily for regulation to solve. This is actually for us in the industry to solve. We need to provide this to our clients who are buying these ETFs. We need to give them that confidence and understanding as to what they're trading and whether it's a good price or not.
Yeah. Now we are getting towards the end of our time, so I wanted to ask you guys what you think is kind of the biggest obstacle to the development of the ETF industry in Europe at the moment. Obviously, for a while we talked about MiFID II being this game changer, not quite there yet. What would you now want to see change, whether it's a regulation, more investor information about, that you think would actually help the evolution of the ETF market in the region?
Yeah, I can probably start with it. I do think it's adoption of that instrument. I mean, yes, industry grown tremendously. Almost 800 billion at the moment in Europe. But I think the inhibitor is still that very intermediated way of end clients, private wealth gets advice on how construct a portfolio. I think that if this comes to a tipping point, and if transparency about products, what they deliver, how they perform, how much they cost, how you can use them easily to construct portfolios, that will be, for me, the trigger point. And I think we have seen that in the US, the adaptation of private wealth and clients using them frequently for their core portfolios. I think that has to change. And I think this will change over the next few years. Where we're just starting to see that use of ETF in variety of portfolios, not only for, as we said, institutional-like portfolios, which they have other Delta One products, and the ETFs just become a good tool also to do the same trick, right? But I think what really will change and what we see happening is for core holding, simple portfolios, balanced portfolios using ETFs.
Antonette, do you have any thoughts?
A few thoughts. So I certainly think the regulators, and I'm not really necessarily saying regulation, but I think the regulators, as they continue to explore this area and as they continue to have opinions and clarify in their own minds things around liquidity and that, I think that will help. And if that leads to a resolution around the whole transparency issue and a solution there, I think you'll see more ETF or more asset managers entering the space. Just on the other side, though, I suppose, and this is a common theme in terms of education. I think ETF sponsors continuing to educate the market. If you look at the US versus Europe, there's much less retail investors in Europe. We're not great at managing our own money, so I think there's a huge education process there that will lead to the use of ETFs because they make sense, they're low cost. So, I think there's a number of factors, but there's certainly two.
Yeah, I think I'd agree with that exactly. I think, if I think about the discretionary management industry, the wealth industry, it typically has used, funds, historically, obviously. And there were, many reasons for that, including, various sort of, commission arrangements, etc. But it's clear that buzzword transparency, it's not just being used today in, pertaining to ETFs. We see it everywhere. You have the whole Woodford saga going on in the UK at the moment that, hasn't been mentioned that often. But I think all of that just means that in the modern day, people, really want transparency. And what ETFs do is they're much more flexible than mutual funds. And, they give a level of transparency that's, hard to get elsewhere. And so to Thomas's point, I think I totally agree that gradual transition out of when I'm updating my portfolio, do I want to stick with this arrangement I've had before, or do I want to move into, using more ETFs as my building blocks? And if I use ETFs, what do they cost? How do I trade them? And platforms, brokers, the system being able to facilitate that, I think is still in its, its early years.
Mm. Steve?
Yeah, so I think it's confidence and choice. I think we need to deliver better choice when it comes to execution. I think, as I say, transparency of price is fundamentally important. It's that total cost of ownership. But I think, if we want to talk, I think one of those, as I said, one of the big inhibitors, I think, to the growth is we still get questions from clients about why these things are illiquid. These things don't trade. We look at ADVs. We're used to looking at ADVs. So I think that's where we need to come up with, better choice when it comes to execution, and that will then deliver the transparency and the volumes that we expect and we know that are possible through the ETF.
Super. Well, that is the end of our time. Thank you guys so much for being such a wonderful panel. Really appreciate it. Please join me in thanking them for their contribution.